Ladies and gentlemen, I welcome you once again to our next Forex class episode. This is one of the most important calls that I'm going to teach over here. Don't forget one thing, that I want you to remember that my name is Kenneth. So wherever you are, whether Facebook or TikTok, any social media handles that you are on, just kindly follow me. Now today it's very important that we discuss something called the currency pairs. Now let me divide this board into two for you to understand. So a pair, a price code of the exchange rate for two different currencies traded in the forex market. All currencies are identified by its own currency code. That is a currency, a forex pair, for you to understand. In this short, simple code. Now let's take, for instance, we have something like USD JPY, and we have something like Euro USD. Now these pairs are currency pairs. I will explain for you to understand something over here. This is what you have to know. Every currency has its country code attached to it. Now something like this, just like I said. Now let me break it down for you to understand something over here. Before these pairs, these become pairs, they were currencies. Before this became pairs, it was currency. Now currency is like this. We have Euro, which is this one, and then we have USD, which is this one. We have JPY, which is this one. Hope you understand. And then we have the USD over here. And then we have GBP. We have GBP. We have Australian dollars, AUD. Okay. We have NZD. We have CAD. We have what again? CHF. What again? 1, 2, 3, 4, 5, 6, 7, 8. Now 8. Good. Now this is what I want you to understand in forex trading. These currencies over here, 8 currencies, are the major currencies. I repeat, these 8 currencies you are seeing over here are the major currencies traded in the forex market. What I want you to remember is that aside the major currencies like this, we have major pairs too. Now, before we go to pair, this is what I want you to understand, that currency, this one currency, is what is linked to another currency to make it called a pair. So just like I said, price code of the exchange rate for two different currencies traded in the forex market. So that is a pair for you, the definition of a pair. So price code is a price code. Euro is a price code. This is a price code for exchange rate. Two different currencies. Okay, two different currencies. That is what? The pair. Good. Now, let me give you this scenario. So when you see something like Euro NZD, this is a pair. Euro, this one, a currency code, is a currency code, together with NZD, New Zealand dollars, together with it becomes a pair. USD, US dollars, okay, together with Japanese yen, which is the Japanese yen, this one, the Japanese yen becomes a pair. Same as this, Euro to USD. You can choose any pair over here and combine with any pair over here, like any pair combination. So two different currency quoted is a pair. It's what becomes a pair. Now this is what I want you to understand the most. I said that all currencies are indicated by their own country code. Good. Let me take it for instance. When you take GBP as an example, GBP, the G stands for Great, the B stands for British or Britain. Okay, that's the country. The country is Great Britain. What do Great Britain spend? They spend what is called pounds. Pounds. Now go to USD, let me take USD. U stand for United. So United States. Okay, United States. What did the United States spend? What is their currency? Is the dollar. That is their dollar. Okay. So same as this, Canadian or same as this. Okay. Good. Same as this. Same as this. So you have the Swiss francs. Okay, Swiss francs, which means that they spend the Swedish francs, that's their currency, their form. That's the France, the French currency, Australian dollar, okay, Canadian dollar, that's the same thing. Okay, Canadian dollar, that's the same thing. So every currency, every country has its own currency. So like something like this, New Zealand dollar, that's it. JPY support Japanese. What do Japanese spend? They spend the yen. Okay, they spend the yen. Euro is the same thing. They spend the euro. Okay, and the same thing. So every country are identified by their own currency. Now, one thing that I want you to remember is the major pairs. The major pairs are pairs that has USD in them. Put it in your coconut head. The major pairs are pairs that has USD with them. Now, for instance, you saw a pair like USD JPY. You saw a pair like Euro USD. You saw something like USD CHF. Okay, or you saw something like NZD USD, okay, or something like AUD USD or USD AUD, something like this. So all this that you are going to see over here, as far as they have the USD at the end, at the beginning or at the end, it means that they are major pairs. That's the major pairs. And one thing I want you to know about the major pairs is that they are very volatile in the forex market. They are very, very volatile as compared to the other market. When you come to something like this, now especially pairs that are having USD with them, they are very volatile. So one thing I want you to know is that these pairs are volatile. And aside that, if you see any pair that do not have USD with them, example like GBP, JPY, this is not a major pair, this is a minor pair. I want you to understand something there. CHF over here, CHF, we have CHF, and then I add NZD. It becomes a minor pair, not a major pair. It's a minor pair. This is a minor pair. But without this, okay, without the combination of the other, it's not a pair. It becomes a currency. That is what I want you to understand on very here. Simple and simple as ABC. Now we move to the next session. But before we move to the next session, this is what I want you to do. If you haven't subscribed to the channel, please again, kindly do all. I beg you to subscribe to the channel for me. My name is Kenneth. Just subscribe to the channel wherever you find this video. And also, let me just put this information outside. If you are a graduate and then you are about to do your graduation, wherever you are in Ghana, or if you know someone who is about to do his graduation, especially University of Cape Coast, UCC, this is what I want you to do. Just call us. Okay, our old studio is offering you a quality images on such a memorable day at a low cost. Okay, just book us. Call this number to book us. So name is Kenneth Godfred. Use Kenneth Godfred for a discount. Use Ken or say Godfred for a discount. Okay, good. So let's continue with our currency pairs. So currencies are always traded in pairs, just like I said. For example, Euro USD, like this, is a pair, just like I said earlier. So this is what I want you to understand the quote currency. Now, one thing I want you to understand that the base currency is superior than the quote currency. Every time, the base currency is superior than the quote currency. And this is what you have to understand. The base currency gain their power over the quote currency when the market goes up. And the quote currency gain its power over the base currency when the market goes down. Okay, let me draw it well. Now, so this one gains in power on sell, and this one gains in power on buys. Okay, sells and buys. And then one thing I want you to know is that in every pair, whenever you are trading, okay, you automatically buy one and sell the other. Put it in your coconut head. I want you to understand. You automatically buy one and sell the other. So if you are buying on Euro USD, it means that you are selling one and then you are buying one. So which means that when you open your market, when you open your structure, or when you open your MT4, MT5, or trading view, or whatever you used to trade. Now this is what you have to see, that you are automatically buying one or selling the other, or you are selling one and buying the other in the opposite direction. That's how it works. Good. Let me show you some. I don't know if I can get some screenshot to show you. This is great. GBP AUD. So GBP AUD is one thing I was trying to explain for you to get me and the understanding of what I was trying to mean. Okay, something like this. So if you are buying, you are automatically selling the other. Now this is what you're going to see when you open your chart like this. You're going to see some lines over here. Okay, some lines over here. These lines, okay, that you are going to see over there. So one of these euro is equals to USD of that number. I don't know if you can get it. Let me show you something like this. 1 euro like this. Okay. So let me put this for instance, GBP. Okay, and then 1 AUD is equal to 2.02641 AUD. Now this is what I'm trying to explain over here. So if I'm buying one, if I'm selling 1 GBP, I'm automatically buying 2.02641 AUD on the market. That's what I was trying to explain for you to get understanding. And also, if I am buying GBP, okay, if I'm buying GBP, it also goes the same vice versa. That is how I want you to understand. Also, same applies to this, or same applies to any pair. So, for instance, like if you are trading on gold, XAUSD, gold is not a forex. It's not a forex pair. It's a metal. I beg. Gold is a metal. So, very soon I'll talk about that. The categories of pairs in the forex industry. We have the metals, we have the exotics, we have the commodities, we have the futures, we have the forex pairs as forex pairs. We have the standard forex pairs. We have the, they are different types on the market. So this is what I want you to understand: the basic aspect. The basic tips on the forex market. Okay, good and good. So if you don't understand anything at this point, I think you can ask me a question and I'll draw my attention to you. Okay, and then let's move to the next place. Now we have the ask price, the bid price, and then the spread. Now, when you open your MT5, okay, or MT4, or your trading view, you're gonna see some numbers over here at this, and then you will see that your price is what we are going to see. You are going to see two different lines on the chart. Two different lines on the chart. One is green, one is red. Now, this is what I want you to understand very, very well. One is green, one is red. Now, I want you to understand this and understand it very, very well. One of them is the ask price and the bid price. Now, what is the ask price and what is the bid price? So, the bid price is the price at which the broker, your broker, is willing to buy the base currency from you. So, the price at which you can sell. Okay. So, for instance, you place for a buy, and then it goes in your favor. Let's say you place for the trade over here, you place the trade over here, and then it goes in your favor, breakthrough to that some point like this. Okay, you took the price here. So the ask price and the bid price will be over here, this side. It's going to be over here. Let me use this green marker for simple understanding. So maybe somebody might not get what I'm trying to explain over here. This is very simple too. Okay, this very simple scenario. Not most people do find it very, but for I'll go on my MT5 to show you what actually the ask price and the bid price is. So let's say you take for instance this is the green, the bid price. That's the bid price, and then the black one will represent the ask price. So if my TP is over here and the bid price and the ask price does not hit it, it means that the broker is not going to close the trade. It will still remain the same. If one hits before the other, that one also is another trouble. That means the broker is not willing to close the trade for you. Now this is what I want you to do. An example of this ask price and bid price is something like this. You can see over here that there's a green and there is some kind of red, over here. That is what I'm trying to explain for you to understand. The green represent the bid price and the red represent the ask price. Now the bid price is at which you are selling to the broker. Okay, you are selling to the broker and the broker is buying it at that price. And then the ask price is the price at which the broker is willing to sell the base currency to you. That means you are buying from that price. Now, so it goes. And then the spread is the differences between the ask price and the bid price. Now, that is why the broker used to make their money. So, for instance, if market is selling and then you sell and then you hit your TP, it means market has been what? The broker is buying and the state are selling from you. Okay, that's how it is. They make their money from this ask price and bid price. Let me move to the next session and then let's see how it goes. But I hope you still guys understand about this. The ask price, you don't still understand. Just know that this is the bid price and this is the ask price, and they move together. Wherever your TP hits, it means that the trade has been what? Done successful. Okay, the broker has been able to buy the trade and boom, you're good to go. See. Now, who trade Forex? Who are those who trade Forex? Let me clear my board. Let's continue. Now, who trades Forex? There's one simple thing. This is the most important thing that you have to know. It's very simple, but it's very important. Now, we have the big banks. We are trading with big banks. Big banks are not banks like the normal banks we are seeing around, but big industries. Okay, big industries. I'll mention one or the large financial institutions. Good. And then we have the central bank. So the financial institutions like the street war. Good. For instance, the street war. So example is the street war. Okay. They trade billions of dollars every day. Billions. Every day. Billions of dollars. Not million. Billions of dollars. Financial market, every market has its own trading volume. But the Forex is the largest, which trades 1 trillion. Is it 1 trillion? trillion dollars are being traded on the forex market daily. So just imagine the street war trading 1 billion, billions of, not 1 billion, sorry for my words, it's not billions of dollars every day. Just imagine the street war, they trade billions of dollars every day. So not just the street war, there are different financial, large financial institutions or big banks that are trading on the forex market. That is why I said it is stated that 1 trillion are traded daily. So just imagine. And also we have the central banks, okay? The central banks are also trading on the financial market, on this forex market, and the government too are trading on the forex market. So we have the central bank, we have the government. The central bank and the government, they are the bank of so and so, the bank of your country. So you come to Ghana, you have Bank of Ghana. When you come to Nigeria, we have Bank of Nigeria. We have Bank of whatever. Bank of. So that is how it is. Okay. The bank is the institution that is trading with the government, and then from the bank you move to the large commercial companies. So large commercial companies. So large commercial companies like something like for instance, like we have example of such large commercial companies like BlackRock. Okay, we have BlackRock. We have the what again? There are different companies. You know, Nvidia trade. Nvidia. We have Nvidia. We have what again? We have Tesla. They are trading the stock market. You know, they are okay. They are all part of the financial market too. Tesla. What again? So different companies are being trading with this. You know, trading as large commercial companies, and then it comes to the retail traders. Retail traders are the individuals. Retail traders are we the individuals. We are the retail traders. We do trade in the stock market or the financial market. We test our small money that we do have. And so there's one advice I used to give to people, or people used to, or maybe we retail traders used to give ourselves. We are trading against these people, the big banks. We are trading with them. Either you are trading against them or you are trading with them. Sometimes you have to act smart and disciplined. That is why sometimes you lose money. Someone may be asking, so if I lose money on the forex market, where is it going to? It's going to the big banks. It's going to the central bank. It's going to the large commercial companies. It's going to their places. So if you win the money, they lose the money too, and then you win it. That's how it is. So they lose money, and then you also win yours. That's how it is. So that's why I keep saying that every blessed day, every minute, every hour, there's amount of 1 billion candlestick opening and closing. 1 billion candlestick opening and closing. How much are you taking home? This is just simple understanding that you have to know about this. But you know, it's very important to know all these stuff. Now, this is what I want you to understand, for you to understand very, very well. Trading forex is a possibility game. It's 50-50 outcome. Now, no matter how confident you are in yourself, no matter how confident you are on the market, you will still lose money. It's just the narrative of the game. You will still lose the money. So this is what you have to do to keep on winning. Just develop the edge to trade. Okay, just develop the edge. Just have the edge to trade. Just have the consistency and be disciplined. Follow your strategy and make sure you trust yourself, believe in your strategy, believe in yourself, and then you make it on the forex market. This is just a simple video explaining Forex trade. This Forex trading introduction to the currency pairs. My name is Kenneth Godfrey. Wherever you find this video, just share it with someone. Don't forget to also book our own studio for your quality images on such a memorable day. Whether you be in any university in Ghana or whatever you are doing, in a ceremony to